Let's start this one off easy, okay? So when the graph is moving up and when the financial markets are moving up, they're not just moving up in a straight line like this, okay? In reality, they're made of these little vibrations like this. Charts move up and down, move up and down. Now, you kind of have to imagine a line of best fit which shows this moving up, because it's not just moving straight up like this. Although the general direction might be up in this case, it's still a combination of these vibrations, we'll call them. They're basically waves of wins and losses, which over the long run create an uptrending graph. Likewise, let's say we've got a losing period. It's not just going straight down. Even still, it's a sum of these wins and losses. And it creates, again, this vibrational effect where price isn't just moving straight down, it's vibrating up and down with a trend of going down. Now, if you've got a long-term trending asset like this, for example, on gold, it's not just going straight up and it's not just going straight down. It all consists of a winning period, a losing period, a winning period, a losing period. And the chart will vibrate in the short term, but if you just zoom out, it's going up. Right now, I'm looking at gold on a monthly time frame. So each one of these bars that you see on the chart represents one whole month of price action. Now, like I said, price moves in phases of wins and losses. One winning year could consist of seven winning months and 5 losing months. A winning month could consist of 2 winning weeks and 2 losing weeks. A winning week could consist of 3 winning days and 2 losing days. A winning day could consist of 8 winning hours and 16 losing hours. You get the picture. Price moves in phases of wins and losses. The financial markets are not just wins and they are not just losses. They are always going to be a combination of wins and losses. If you invest in the financial markets and you have a losing hour, a losing day, a losing week, a losing month, even a losing year, that is completely normal and to be expected. It doesn't mean that you've done anything wrong. Imagine never investing in gold or the S&P 500 because you had a negative month. You would have missed out on all of that gain from the winning years over the long run. So if you have a losing day, a losing week, a losing month, it's nothing to be scared of and panic and pull your money out. That is just the way that the financial markets vibrate. If we have a look here at 2019 on gold, which was a really good year for gold. Okay, here's the start. Let me line that up. There's the start and there's the end. Okay, in total, 2019 saw a 18.55% return on investment for gold. Okay, so that generated 8% alpha compared to the average 10%. Now, if we inspect that closely, you'll actually see that we start off here in January and we had a win. And then we had 3 losing months that at one point actually brought your investment below what you started at the start of the year. So imagine you bought gold here at the start of 2019, okay? And let's put yourself in the shoes of your investment journey, okay? You had a very nice January, and then February started off really nice as well, going up to that wick. Let me put the cursor on so you can see. We had a very nice January. Then we had a very good start to February, and then 1, 2, 3 months closed negative, and then even in the 4th month, or May we're in now, price then fell. And at this point here, the bottom of this wick, you're now below your initial investment than when you started at the beginning of the year. Now imagine if at this point you said, I'm 4 months in and I'm below what I deposited, so I'm going to withdraw and take my money out because gold doesn't work, okay? The next month was positive, and then the next month was positive, and then the next month was slightly positive, but kind of just consolidating, and then the next month after that was massive, okay? We actually went all the way up to this point, at this point here, in August/September. Then we had a negative month, then we had a winning month, then we had a negative month, and then we had a winning month to close the year out here. In total, if you just bought and held gold in 2019, you would have made 18.5% and beat the market. However, there were plenty of times, okay, imagine it came up here and then you saw it lose and you panicked and thought, oh, I don't want to lose all these gains, and took your money out. Okay, if you had a loser's mindset to investing and trading, there's plenty of times where you would have pulled your money out. If you have a winning mindset, you would have left your money in the market and you would have made 18.5% that year on gold. Now let's look at another thing. In this 12 months, we had 1, 2, 3, 4, 5 losing months. And we had 1, 2, 3, 4, 5, 6, 7 winning months. Or you could say 6 winning months and 1 flat month, or 1 break-even month, for example. So that's kind of giving you a picture with an example of how the financial markets move in terms of wins and losses over time, winning and losing months, and how the winning months and the losing months stack up to make a yearly gain. Now, I'll tell you what, because I loved that example so much, we're going to do another one, just to show you that it's not like a cherry-picked example or something like that. I think this is a really good exercise to go through to kind of put yourselves in the shoes of a long-term investor and how the financial markets really work. So we're going to look at another example. We're going to look at the calendar year of 2022. In this year, we started off here. We had a really wild ride up, a really wild ride down, and then we finished up here, which was about where we started. Okay, so January started here and December ended there. So we pretty much just broke even for the year. But what it looked like was we started here, we lost in January, win, and then a whole load of losing months there, which was recovered November and December, back to where we started. Now, imagine that's your journey for the year, okay? And I'm going to tell you, I'm not actually going to get into that yet. Let's just go over that. We'll save that for later. This is just going to show you the journey, okay? So a losing month, winning month. Losses, win, overall, break even. Didn't actually lose any money, okay? Didn't make any money, but we actually just didn't lose any money, okay? I'll tell you some examples of what bad investors will do, okay? Maybe they'll invest here. They'll lose money after 1 month and they'll say, oh, that doesn't work. I tried it for a month, didn't make any money, doesn't work, pull my money out. And then that's one way that they've just lost out on all of those future gains. Another one would go, yeah, whatever, I've lost money, let me keep going. Oh, wow, we're up to this point now. Oh, wow, this is amazing. This is really good. I'm going to reinvest and put 100K. I'm going to put my life savings into this at the high, okay? And then they see it go all this way down, and let's say, you know, they get to this point, they're now, they're now 21% down on their investments. They've put their life savings into it. They've lost 20%, and they go, nope, okay, it doesn't work anymore. I'm going to pull out, and they withdraw all of their money there, okay? And then price rises again in 2 months and goes back to break even at the start of the year. In that case, they still lost their money from this redeposit down to here because they gambled on when to invest, and they invested at a peak. And in that scenario there, they deposited at a peak and they withdrew at a trough. Okay, more on that later in the videos. But the main point with this one is that no matter if it's a winning month or a losing month, if you just buy and hold into a long-term rising asset, the markets are with you. The markets are on your side. It's how you're thinking about them that is against you. The markets aren't against you. There's plenty of vehicles in the market that are with you. But if you're approaching them with a loser's mindset, you're gonna lose. So to recap, in 2022, we only had 4 winning months and 8 losing months, and we still managed to break even. So how can we have 8 losing months and 4 winning months and not lose money? Well, that is the combination of wins and losses in the markets and how these small vibrations add up to make for long-term gain. And again, if you have a winning month, a losing month, a winning day, a losing day, it's normal. It's just how the markets move. Even the most reliable investments, gold and the S&P 500, could have a break-even year, could have a losing year, could have 7 losing months back to back. And it doesn't make them a bad investment. It just makes them bound to the normal natural laws of the financial markets. And no matter if you're trading or investing, or if you've got the best strategy since sliced bread, you're going to come across wins and losses, so you need to have a winner's mindset if you want to win in the markets.